Crafting a successful investment strategy is a key ingredient for every savvy investor with their unique financial objectives in mind. In this video, we'll unveil a treasure trove of investment insights tailored for those eyeing the thriving real estate market in Arizona. Brace yourselves, the Grand Canyon state is ripe with opportunities. Unlocking amazing potential, foreclosed properties are waiting to be discovered in vibrant cities like Phoenix, Chandler, Gilbert, Mesa, Scottsdale, Tempe, and Queen Creek. Dive into the 1% rule, a golden benchmark where rental income meets purchase price, and yes, it's attainable. But that's not all. We'll show you how to tap into investment capital that's not only more accessible but also budget-friendly. And the icing on the cake? Achieving a positive cash flow with a reasonable 20-25% down payment for an investor loan is not just a dream, it's a practical reality. Stay tuned for a wealth of knowledge on real estate investments in Arizona. Investor fix and flips. Investors are navigating a shifting landscape, and the latest market data tells an intriguing story. Foreclosures and short sales are becoming scarcer, prompting a change in strategy. Fear not, for a thriving market awaits those who set their sights on revitalizing and flipping homes, breathing new life into them through repairs, renovations, and modernization. The spotlight is now on infill and close-in fix and flip properties, capturing the hearts of urban enthusiasts who prefer the convenience of city living over the trek to suburban communities. Here's the reality. The average homebuyer lacks the means, time, network, and expertise needed for a full home renovation. That's where fix and flip investors come into play, armed with the essential ingredients, capital and connections. In the bustling Chandler and Gilbert real estate rental market, where the inventory of single-family homes stands at less than 3 months' supply, opportunities are aplenty. Investors face a pivotal choice: 1. Fix and flip, or 2. Fix, rent, and hold, depending on the acquired property. The astute move may be to embrace a buy-and-hold strategy, capitalizing on higher future prices. Before we delve deeper into this real estate journey, make sure to hit that subscribe button so you won't miss out on more insightful videos like this one. Stay informed, stay ahead. Easier for investors to raise money. Recent regulatory shifts have ushered in a more investor-friendly era, simplifying financing options. Now, the door is open for investors to secure up to 4 loans, counting both their primary residence and second home, requiring a minimum of 20% down payment, and an additional 6 investment loans, each necessitating a minimum of 35% down payment. While Fannie Mae and Freddie Mac extend the possibility of 10 loans, many financial institutions are currently capping investors at 4 loans, with a few exceptions permitting a 5th one. It's important to note that loans on your primary residence and second home, if applicable, are included within the initial 4 loans. Do you have funds languishing in your IRA, earning paltry returns? Here's an intriguing opportunity. Consider establishing a self-directed IRA, allowing you to seamlessly transfer funds from your traditional IRA into your real estate investment blueprint. Let's delve into your financial plans and explore what's achievable in today's dynamic market. Compare property values and rents. Financial metrics can be enlightening, but when it comes to gauging a property's true market worth, nothing speaks louder than the actual sale prices of neighboring properties. The same principle applies to local rental rates. It's crucial to conduct a comprehensive rent survey in the vicinity before purchasing to ensure that the projected rental income aligns with your financial obligations. Often, the affordability of homes in the area serves as a barometer for the potential purchasing capacity of future homeowners and renters in that locale. Be prudent, tax laws may change. Relying solely on existing tax regulations when making investment choices can be a shaky foundation. The tax landscape is in a perpetual state of flux, and yet, the quality of an investment stands independently of tax considerations. The ideal property boasts affordable, enduring financing options and generates income before tax implications. This is the holy grail for any discerning investor. Specialize in something you know. Begin your journey in a real estate market segment that resonates with your expertise. Whether your forte lies in starter homes, renovation projects, foreclosures, low down payment options, condominiums, multi-unit residences, or small apartment buildings, specialization holds the key to gaining valuable experience in the realm of investment properties. Know the costs going in. Master the intricacies of financial statements. Dive deep into understanding operating costs, loan repayments, vacancy expenses, and taxes. What's the story told by the cash flow statement? These are pivotal questions that demand answers before committing to a robust investment strategy. Regrettably, many investors either falter in maintaining comprehensive records or opt for denial when faced with less than stellar numbers. Success hinges on your unwavering commitment to diligent research and analysis. On the flip side, meticulous maintenance records hold immense value for investors. Document every facet meticulously, ensuring your property gains a substantial edge in the market when the time comes to make a sale. Your future self will thank you for it. Know where your tenants are coming from. Purchasing a property with existing tenants? When the last rent hike occurred not too long ago, your tenants might be contemplating a change in residence. In cases where tenants hold short-term leases, the property owner might be maintaining the status quo solely to entice unwitting investors. It's imperative to engage in thorough discussions with the tenants to validate lease conditions, rental rates, and security deposits. Additionally, make certain to secure their security deposits from the seller during the closing process. Assess the tax situation. Taxes represent a fundamental aspect of a flourishing real estate investment strategy, serving as the crucial element that can transform your cash flow from a negative to a positive outcome. To harness the full potential of your investments, delve deep into your tax circumstances and explore how they can be tailored to your benefit. Seeking guidance from a qualified tax advisor is a wise step on this tax optimization journey. Investigate insurance coverage. Should the seller's coverage be founded on a replacement value that falls below the current market standards, you might find yourself facing elevated insurance expenses owing to a higher purchase price. It's of paramount importance to reach out to your insurance provider immediately upon entering into a contract and initiating the escrow process for your property acquisition. This proactive approach ensures your insurance carrier can provide a binder for the property. Furthermore, it's advisable to conduct a comprehensive review of prior insurance claims that could potentially spike your expenses during your ownership of the investment property. Take note that certain insurance companies may decline to insure a property boasting a roof that's aged 20 years or older. These precautions will pave the way for a smoother investment journey. Confirm utility costs. Investigate which utility services come with individual meters, with tenants directly responsible for paying their utility bills to the service providers. Request the seller to provide records of the local utility bills, offering insights into recent utility outlays, particularly if any of these charges are divvied up among the different units and integrated into your tenant's rent. This scrutiny ensures you have a clear grasp of your investment's operating costs. Consult with your accountant or tax attorney. Taxation forms a pivotal pillar of triumphant real estate investments, hence it's imperative to enlist the services of a knowledgeable accountant well-versed in the ever-changing tax landscape. Keep in mind that the entire property is typically depreciated over 27.5 years. However, don't overlook the opportunity for accelerated depreciation on components with shorter life expectancies. Think carpets, water heaters, and appliances, among others. An unwavering commitment to meticulous record-keeping is non-negotiable. Errors tend to rear their head at year-end when attempting to reconstruct a year's worth of financial events. The long-term costs of neglecting comprehensive daily record-keeping can be substantial, so make it a routine. Your future self will undoubtedly thank you for this foresight. Inspect, inspect, inspect. Conducting a comprehensive inspection of your prospective investment property in Chandler, Gilbert, or Mesa is an absolute necessity when delving into the realm of real estate investment. The golden rule is to never, under any circumstances, acquire a property without physically inspecting it firsthand. In cases where an in-person inspection proves unfeasible, it's a wise move to enlist the services of a certified professional home inspector. They will meticulously assess the structure and mechanical systems, ensuring you remain free from unpleasant surprises down the road. Precise knowledge about your purchase is the bedrock of a successful investment journey, as unforeseen deferred maintenance expenses have the potential to disrupt your investment blueprint. Consider the inclusion of a home warranty insurance plan as a valuable safeguard to offset unforeseen house repair expenses during the initial year. This provides a buffer as you gradually amass ample reserves from your investment earnings, ultimately allowing you to become self-reliant in insuring your property. Key components like appliances, water heaters, HVAC systems, and roofs come with finite lifespans. While your home inspection can identify non-functional elements and the seller's property disclosure statement, SPDS, offers insights into past major repairs, it's important to note that a home warranty policy doesn't extend coverage to pre-existing issues. In some cases, roof accessibility may pose a challenge for home inspectors, especially in new construction settings where inspections may be limited. In such instances, the use of drones can be explored. However, for a comprehensive assessment, it's prudent to enlist the services of a roofing company to perform a thorough roof inspection and an HVAC specialist to scrutinize your HVAC system. This supplementary level of scrutiny complements the overall home inspection, ensuring no stone is left unturned in safeguarding your investment. As we conclude this exploration of the promising real estate landscape in Arizona, you've gained valuable insights into the hidden gems waiting to be discovered. Now, if you're intrigued by the world of real estate and eager to explore further opportunities, we have another captivating destination for you. Just a click away, we have a video dedicated to the thriving real estate scene in Los Angeles. While you've delved into the Arizona market, Los Angeles presents its own unique set of opportunities and potential gems. By shifting your focus to this vibrant metropolis, you can unlock a wealth of real estate prospects. So, if you're ready to explore what the City of Angels has to offer, simply click on the video displayed on your screen. Your next real estate adventure awaits.